Well guys, the inflation rate is officially out for the month of August and things are not looking great. What's up guys, it's McKeown back again with a short and quick video today just to give you guys an update on kind of what has come across the news as of this morning. Now the reason why I'm giving you guys an update obviously here regarding inflation is this has a direct impact on housing as well as mortgage rates. Now there is a reason why I'm watching the mortgage rates daily, and that is because if you watched an older video, a couple videos back, I'm purchasing a house in Florida. Unfortunately, it's a new build house that's being completed in the month of likely December, end of November, so I can't currently lock my rate. Since I can't lock my rate, obviously wherever the interest rates wind up within, I think, a 30-60 day window of my closing date is likely where I will lock the interest rate and be stuck with that interest rate for the life of the loan. Now, yes, I can refinance that property down the road if rates get better, but I'm locking myself in at that rate and that monthly mortgage payment for the foreseeable future. So the news this morning of where the inflation rate may be for the month of August was going to be a huge precursor of where interest rates are going to continue to head, whether they're gonna head down or they're gonna continue to rise. So let's talk about just that, guys, inflation. The month of August, the consumer price index rose by 0.1%, and if you exclude fuel as well as food costs, it actually rose 0.6%. Now the real reason why it only increased 0.1% and not 0.6% is because of the fuel prices and the significant amount of price reductions in the cost of gas in the last month. So if you eliminate that completely, we're actually talking about an inflation rate that is moving north of 0.5%. Now to give you guys some side-by-side comparisons here, economists expected our inflation rate to go down by 0.1%. Instead, it rose by 0.1%. Now on top of that, if you exclude fuel costs as well as food, economists expected, especially with the significant reduction in fuel prices, and that you've actually seen at the pumps on a daily basis, they were expecting it to decline 0.3%. If you exclude those factors, it actually rose 0.6%. So this goes back to the reason why this is obviously important for me. This is obviously important for a lot of people. A higher inflation rate means just overall everything is going to be more expensive. With a lower inflation rate, things are going to be cheaper, as well as borrowing money is going to be cheaper. Now there is a kind of a domino effect to all of this as well. For instance, if borrowing money is more expensive, which it obviously is right now, mortgage rates are continuing to climb if the inflation rate continues to stay high. Think of it from a larger and broader perspective, okay guys? So for instance, if I'm a developer and I need to borrow some money to develop this community, this 800 home community, now I am borrowing money at a higher cost. Where do you think I'm going to put that cost onto? I'm gonna put that cost onto home buyers or new home owners. Not only has inflation risen by 0.1% when it was expected to decline, core prices have also continued to climb. Core prices also rose more than expected on a monthly basis, jumping more than 0.5% at 0.6% in August, which is a bigger increase than April, May, June, and July. Now, typically speaking, when we're talking about inflation rates, we're talking about not just one aspect of our economy increasing in price, but we're talking the cost of groceries up by almost 8%. We're talking rent nearly growing by 8% over the month and 6.7% on an annual basis. I can tell you as a landlord myself, with rising interest rates, you obviously have to get a better return somehow. Oftentimes that's by increasing rent. Now, if you guys remember about a month ago, President Biden came out saying that we were currently not in a recession and that the inflation rate was at 0%. The reason why inflation was at a 0% was because it didn't actually go down and it didn't actually go up. Now, if you've been watching the trajectory of inflation, you've seen it rise north of 9%. So in the month of July, when President Biden said we did not have an inflation percent, it's because inflation didn't go up or go down. Now, with the month of August and inflation coming out, economists expected it to go down and hopefully continue to go down to the point where we could get back to a regular economy. However, unfortunately, this month, it didn't go down. It went up. So on a quick analysis here, obviously this affects every single consumer across our economy. We're talking about rent, we're talking about food, gas, so on and so forth. But me personally, it's obviously going to affect me significantly purchasing a home in December. But also on top of this, it's going to continue to affect my real estate company as well as mortgage lenders in the business. So in the near future, this obviously affects where my mortgage interest rate is going to be. For the house that I close in on Florida in December timeframe, things could very much change if in September, October, and November, if inflation rates come out and they continue to go down. But if they head back up, I do not even have any idea where interest rates may lie. Now, on top of that, it's gonna affect my day-to-day business just as a real estate professional. With rising mortgage rates, you're obviously having a lot less investors pulling in money to purchase investment properties. You're having far less people decide to purchase a house with a large mortgage rate rather than just continuing to rent. So me personally, as a real estate professional, the way I earn a living is off of closing deals. And if I have far less buyers and sellers wanting to sell or purchase because the market's kind of in an unknown state, it obviously means less income for myself. Now, I'm definitely not an economist, but I have learned over the last 5 years, especially kind of with the changing in the market and how significant of an impact it has made in the last, I would say, 6 months, maybe 3 to 6 months. A lot of this is becoming more and more important for myself, not just for my future, but because I'm in the industry that is being negatively affected substantially. And a lot of people may look back and say, oh, you know, you had it so good in the last 4 years, just, you know, with real estate prices soaring, interest rates being super low, and everyone becoming a real estate agent. But I'm not disagreeing. The market's been great. Real estate has absolutely changed my life, but if this is something that I want to do for the rest of my life, this is information that I definitely need to be keeping an eye on. Now, what I'm going to do to end this video, guys, is just to show you real quick what this type of news can do to mortgage interest rates as well as the stock market. Like I said at the beginning of this video, I've been watching the daily mortgage rates, and in the last couple days, it's cooled down a little bit. Then as you can see today, we had a significant and probably one of the largest increases, daily increase rate by 0.3%, rising your average 30-year fixed rate to 6.28%. And on top of that huge hike in mortgage interest rates, the Dow Jones also plummeted significantly today. If you would have asked me 5 years ago where the Dow Jones sat or where your mortgage rates were at or what inflation was, I couldn't tell you anything, to be honest with you. It wasn't something that as a high school math teacher meant anything to me. Now, I needed to get gas, I needed to get food, and whatever it cost me at that time is what I spent. Now, obviously being in this profession and knowing and understanding all of this stuff is pivotal for my business and for my future. And I can tell you today certainly didn't make me happy. Thanks again for watching, guys. Make sure to like and subscribe. It really does help, and stay tuned for the next video.